Hey everyone, welcome back to Corporate Decoder. Ever wonder what happens when a company's past promises finally come due? Well, today we're diving into a report from the LGL Group, and it looks like some old warrants are about to become a whole lot more interesting. This isn't just any filing, it's an 8K, which means something important just happened. In this case, it's about warrants, which are essentially options to buy the company's stock at a set price. Think of it like a coupon that's about to expire, and everyone's wondering if they should use it. The important date here is March 6, 2025, because that's when the LGL Group announced that these warrants are now able to be used, or exercisable. These warrants were originally granted back in November 2020, so it's been a while. So what makes these warrants suddenly exercisable? Well, the original agreement had a couple of conditions. First, they would expire in November 2025, but there was also another way they could become exercisable sooner. That was if the average price of LGL Group's stock hit a certain level, something they call the trigger price. That trigger price was $6.65, and the key here is that the average price had to be above that level for 30 days in a row. Turns out that's exactly what happened. The report tells us that on March 4, 2025, the stock price hit that trigger point. Now, there's a slightly more technical term here, volume-weighted average price, or VWAP. What this means is that instead of just taking the average of the stock price, they also consider how many shares were traded at each price. This gives a more accurate picture of what the stock is really worth. If you're one of those warrant holders, you need to get your paperwork in by November 16, 2025. Everything needs to go through Computershare Trust Company, NA. If you hold your warrants through a brokerage account, you should contact your broker for more information. The company included a press release with this report, which is typical in these situations. It's basically the official announcement to the public, summarizing what's happening with the warrants. Now let's step back and look at the bigger picture. The LGL Group isn't a household name like Apple or Amazon. They operate in a more specialized area. They're involved in designing and making electronic components and systems. Think things like frequency control products, timing devices, and things used in specialized communications. The fact that these warrants are becoming exercisable suggests that the company's stock has been performing well enough to hit that trigger price. This could be due to a number of factors like increased demand for their products, successful new product launches, or just overall positive market sentiment. This development could impact LGL Group in a few ways. First, if all the warrant holders decide to exercise their warrants, the company will get an influx of cash. That's because the warrant holders have to pay a certain amount to actually buy the stock. But on the other hand, the company will have to issue new shares, which could dilute the value of existing shares. That's because there will be more shares of stock spread out over the same value of the company. The other question to ask is, why did the company issue these warrants in the first place? Often, warrants are used as part of a financing deal. Maybe the company needed to raise money and issuing warrants was a way to attract investors. Or they could have been used as an incentive for employees or executives. Now, for the financial health of the company, we can't see the full picture from this filing alone. To really understand LGL Group's financial situation, we would need to look at their quarterly or annual reports. Those reports would tell us about their revenues, profits, debt, and other key financial metrics. However, the fact that the warrants are exercisable is a positive sign. It suggests that the company has been performing well enough to increase their stock price, which benefits the warrant holders. Now, looking at the situation overall, LGL Group seems to be doing reasonably well. The fact that the warrants are now exercisable points to a positive trend in their stock performance. Whether the warrant holders exercise their warrants or not, the fact that the trigger price was reached is a vote of confidence in the company's direction. However, there are always risks to consider. The company operates in a technology sector, and technology changes rapidly. They need to stay ahead of the curve and keep innovating to remain competitive. They should also watch their debt levels, as excessive debt can put a strain on their finances. In conclusion, this 8K filing is a small piece of the puzzle, but it tells an interesting story about LGL Group and its financial health. It looks like their past decisions related to warrants have worked out in their favor, at least for now. Thanks for watching. If you found this analysis helpful, please like, comment, and subscribe for more insights into the world of corporate filings. What other companies or reports would you like me to decode next? Let me know in the comments below.